So students, here is the next problem, that is problem number 20. So as the problem says, Atlas Cycle Company Delhi sent 100 bicycles on 1st January 2012 to Murugan Enterprises, Madras. So who is sending the goods? That is Atlas Cycle is sending the goods to Murugan Enterprises, Madras. So your consigner is Atlas Company and consignee is Murugan Enterprises. What they are sending the 100 bicycles, full stop. The cost of each bicycle was 500. So the cost price for preparing for manufacturing each bicycle is 500 rupees. The cost price is 500 rupees each. It was invoiced at 600. For manufacturing it cost 500. So he has said that in the invoice means that is a receipt thing or a pro forma which is sent to the consignee. So in that he is saying that so it is 600 each. So the cost price is 500 and the sending invoiced price is 600. For sending to Madras company he says that it is 600 rupees, but for manufacturing it cost only 500. Next, Atlas company incurred 2000 on freight and insurance. So he has incurred 2000 rupees. Who has incurred? The consigner has incurred 2000 rupees on freight and insurance and received 30,000 as an advance from Murugan company, and he also received a 30,000 as an advance from Murugan Enterprises. Murugan Enterprises paid 1000 as octroi and carriage, 800 as rent and 600 as insurance. So these are all the expenses of consignee. So next, by June 30, 2012, he sold 100 bicycles. So the worth, that is number of bicycles sent was 100. He also sold 100. So that means there is no closing stock here. There is no unsold goods at all. Completely 100 bicycle has been sold for 62,500. So he has sold 100 bicycle for 62,500. Next, Murugan Enterprises are entitled to a commission of 10%. So he is entitled to a commission of 10% on the pro forma invoice, that is on the value sent he is entitled for 10% commission, that is ordinary commission on the goods sent, and 20% of any surplus realized. 20% of surplus commission is also given on the surplus value, that is more than if he has sold any goods. If he has sold the goods more than the invoiced price, he will be given 20% of the profit, and above the invoice price, full stop. Murugan Enterprises remitted the amount due from them by a bank draft. So he has paid the entire amount by the bank draft. Murugan Enterprise prepare ledger accounts in the books of both the parties. So here is the adjustments or a given thing. So is consigner Atlas Cycle, consignee Murugan Enterprise. Goods consign, what they are sending? 100 bicycles. So the cost price is 500, but he is sending it at invoice price at 600. So we'll be recording. So you will be recording at invoice price itself. So it is 100 into 600 is 60,000. So next, consigner's expenses 2000 on freight and insurance. He has received an advance of 30,000. Consignee expenses, that is 1000 as octroi and carriage, 800 as rent and 600 as insurance. Next, coming on to sales. So here they says he sold 100 bicycle for 62,500. Sale is 62,500. Next, coming on to the commission. So commission we had two parts, 10% on pro forma. Pro forma means that is goods sent, that is 60,000 into 10%, 6,000, and also 20% on surplus realized. Yes, he has sold the goods. He has sold the bicycle at 62,500, right? So he has sold the goods at 62,500 minus what is the value of goods sent, that is 60,000. So 62,500 minus 60,000, 2,500 is the surplus realized. He has sold the goods for extra price of 2,500, that is multiplied by what is the surplus commission given over here for the consignee is 20%. So 2,500 multiplied by 20% is 500. Then hope you have been understood this much. So next, coming on to what you are supposed to prepare, ledger accounts in the books of consignee and consigner, right? So see here, next coming on to the ledger accounts in the books of consigner. Who is the consigner? Atlas company. First entry is consignment account. So I'll be showing you the proforma. I have been already sent you with the proforma and also taught you how to prepare that proforma, what and all we'll be writing in the proforma. I told 3 things will be extra we should be record in the consignment account, in the consignment book. So next coming, yes, here is the proforma, right? This is the proforma. So what we are supposed to, first on the credit side, what is there? Buy goods sent on consignment account, goods returned by consignee. So as the question, there is no goods returned by the consignee, so we will be not recording here. By sale, by consignee's account, he has made a sale. Yes, he has made a sale. So by consignee, who is the consignee? Murugan Enterprises. Sales we have recorded 62,500. Next, what is there? By consignment stock account, load on opening stock. So here there is no thing called as opening stock at all. There is no opening stock with the consignee, so there is no need to write this one. If there is an opening stock, the profit on that opening stock should be credited, but there is no opening stock, will not be writing here. So next coming to buy goods sent on consignment account, load on goods sent on consignment. So here you are supposed to understand, load on goods sent on consignment means profit on goods sent on consignment. What is the profit the consignor has been put on that goods sent on consignment should be recorded over here, right? So here the goods has been sent on consignment, that means the profit has been loaded on that particular goods, right? So we should be recording that. Buy goods sent on consignment account, load, that is profit. What is the profit on goods sent on consignment? Profit which has been imposed on the goods sent on consignment. So for each bicycle he said that he has invoiced at 600 rupees, but the cost of each bicycle was 500 each. So 100 rupees was the profit. So what is the number of bicycles sent? 100. So what is the load now? That is 100. So 10,000 rupees is the load, that is the profit. While sending the goods, he has added 10,000 worth of profit for the goods. While sending to consignee itself, he has added 10,000 as a profit. So you are supposed to credit this side. So hope you have been understood with this side. So next, what is there here? By consignment stock account, closing stock. As the sum says, we have sold all the 100 bags. There is no closing stock. Will not be recording this. This will be talking later. If there is a loss means we will be recording here, but we still don't know that about that. So on the debit side, what will be recording? To stock on consignment account, that is opening stock. So in the question there is no opening stock. Next is goods sent on consignment account. So yes, he has sent the goods on consignment. So what value? That is 100 bicycles was sent at 600 rupees each. That is the proforma price, 600 each. So 60,000. So next is by bank or cash account, consignor's expenses. Yes, recorded the consignment. By bank account, freight and insurance, 2,000. So next is the consignee's account, expenses of consignee. So who is the consignee? That is Murugan Enterprises expenses. What are all these? All the expenses of consignee, 1,800 and 600. So next coming on to the consignee's account, commission, that is commission, consignee's commission. So in the adjustment itself I showed you how to calculate the commission. So yes, if you want you can write like this, if you can divide or else you can write, you know how to calculate commission. I have told in the adjustment. To Murugan Enterprises, 60,000 into 10%, that is ordinary commission, and 20% on a surplus realized, 500. So next what is there? Next year is to consignment stock reserve account. What is this? Consignment stock reserve account, profit on closing stock. So here in the question we doesn't have closing stock at all, and then how will that profit on closing stock come? So we will not be entering that. So no. Next is here is a profit or loss. So we are supposed to see here. So here when we calculate, so here the credit side is more than the debit side. So why? We have a profit on consignment of 1,600. So only this much is the different will be doing from cost price to invoice price here. So here next what will be preparing, that the consignee's account. So there is no changes in consignee's account. There will not come any changes in the consignee's account. So here it is in off and off. So here what all we will be recording on the credit side. So here first is by cash or bank account. What is this? What is will recording in the consignee's account on the credit side? First thing is advance. If he has paid any advance, means yes, consignee has paid 30,000 worth of advance, and also he has incurred the expenses also. So that we should record, and also expenses 1800 plus 600. He has incurred the expenses, so 1000 plus 800 plus 600, that is 2400 expenses, total expenses of consignee. Next, commission of consignee. What is the commission of consignee? That is 6500. So next, coming on to the credit side, so debit side, what we will be recording? Sales of consignee, sales made by consignee, like to consignment account, that is 62,500. So when we do this, the balancing figure, it will be on the credit side, that is 23,600. So that is the balancing figure. This is the balance to be settled. So next, coming on to what we'll be writing, we'll be preparing consignment stock account. So here see one more thing you are supposed to write here. So by consignment account, that is goods sent on consignment. Goods sent on consignment. Here on the debit side, in the previous and all, in the cost price, what we are recording? To trading account, if it was 60, yes, 60 will be writing. But here what happens, we should divide it. So how much is the exact price of that and what is the profit? So this is the exact price of the trading, that is the exact price of the goods, that is 100 bicycles at 500 is manufacturing price, that is 100 bicycles multiplied by 500 is, this is the manufacturing goods. Extra 10,000 is a profit, right? So we are supposed to write it as to consignment account 10,000. So these are all the two books we will be preparing in consigner's book. So next, coming on to the ledger accounts in the books of consignee, there you will be preparing only one account as usual, no change in that. So in the books of Murugan Enterprises, Atlas Cycle Company, what will be occurring on the credit side? Sales made by the consignee. So sales made is 62,500, and on the debit side, all the things he has paid to the consignor for the purpose of selling the goods, what and all he has incurred the expenses, you will be writing over here. Here you will be writing how much is his sales. On the debit side, what and all the expenses he has incurred for selling the goods should be recorded, right? In the books of consignee, consignor's account will be prepared. In that book I am talking, consignor's book. In the books of consignee, to cash or bank account, advance has been paid 30,000. To bank account, expenses of consignee. To commission, expenses incurred. So commission account, commission paid to the consignee by consignor should be recorded. So next is to bank account, distributive final settlement made to the consignor by the consignee, that is 23,600. This is also the balancing figure. So 62,500. So hope you have been understood with this. It is not something difficult to understand. It is totally same. Only the three accounts, only the 3 points that should be recorded in consignment account. All the other books are same. Only in the books of consignment, in the consignor's account, there you will be recording 3 entries. That is, 3 things will be changed. Hope you have been understood with this. If not understood, please ask me. I will be explaining you once again. Thank you.